But the idea is that, we're going to see 10 baggers in this industry a lot. From 2009 to 2011, just that 3-year time period, there were 141 10 baggers in the junior industry.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for August 4th through August 11th, 2025, while supplies last. First this week, backdated 1-ounce Canadian silver maples are just $2.89 over spot, the lowest premium we've seen on maples in years. Next, backdated 1/10-ounce Platinum Britannia are only $34 over melt per coin. Backdated gold 1-ounce Britannia are just $59 over spot per ounce. And finally, 100-ounce PAMP Silver Bars are only $1.89 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. Today we have a returning guest, but it's been far too long since we had him on our show. Jeff Clark, known as the Gold Advisor, now has been in this business, well, actually, second generation. He's going to tell us more about that. We worked together in the past when he was on my show, when it was called Reluctant Preppers. We'll talk a bit about that. Jeff, thank you for coming back on Liberty and Finance this time.
Well, it's great to finally be back with you, Dunnigan. So thanks for having me.
Yeah, I'm glad we were able to reconnect. We saw each other in person now for I think the second year in a row at the Rural Symposium on Natural Resource Investing in Boca Raton, Florida, and that was a great opportunity to springboard. That week was so jam-packed with meeting and listening to CEOs and representatives from so many different companies that we weren't able to pull off an interview live while we were there. But here we are, and only a couple weeks later, we're glad for this opportunity. And in the past, when we had met, you interviewed with our audience. Today, by the way, is Thursday, August 7th, 2025. You had come on my old show to talk to us about things to consider when evaluating companies to consider as potential investments. You talked to us about how it was you became a bit of a gold bug and how it was a generational family thing. I'm going to ask you to pick up right there if we could, and then we're going to get into some rather provocative questions about what's going on right now in the gold markets and especially with the miners. So if we could first just have you give a real quick recap for us on how it is that you're a multi-generational gold bug and a mining bug, and how you got into that and how you carried on the family tradition in that way.
Well, thank you, Dunnigan. I think some of your audience might know my dad was actually a gold prospector. So he did a lot of prospecting for probably 20 years. He didn't work for a company, he worked on his own. He had some friends that did it with him. We once found a seam in Arizona, about 16 grams per ton gold. Sounds great, right? And it was actually near surface, but it was small. And so when you added in mechanized mining, the cost of mechanized mining, it really wasn't feasible. So that's a good lesson, by the way, for people, right? When you're evaluating a mining stock, high grade doesn't necessarily automatically mean it's feasible. You always got to look at the economics. Anyway, I went to work for Doug Casey's firm, worked there for a long time. That was a lot of fun. And then worked for multiple bullion dealers, multiple other newsletters, started the Gold Advisor right in the middle of COVID. But it's been fun, and I'm doing exactly what I love, which is spending 99% of my time evaluating mining stocks.
Well, I remember very clearly that week when you went out on your own, and I was excited for you and still am, and delighted that you're doing it in that way. A lot of our guests are, in fact, independent journalists or independent speculators or independent analysts, and it's quite interesting because we hear so much from the mainstream financial press that says so little about things that really will be quite impactful to people's financial futures. How to seek opportunity where it's to be found, and how to find safety where it's to be found. Now, most of those things do not get talked about on the mainstream financial press. If we can start with a big picture that will be of interest to, I think, all of us, and that is, what is your macro outlook on gold for the next 12 to 18 months?
Well, Dunnigan, we're clearly in a bull market for gold. Some people might say, well, duh, Jeff, of course we are. Well, we have confirmation that the whole market, the whole gold market is in a bullish trend because gold is up 65% since the bull market started. And GDX is up more than that, and GDXJ is up more than GDX. That's exactly what you want to see in a bull market. So we have the ingredients that confirm we are in a gold bull market, including the miners, which means we have the green light to go ahead and invest on pullbacks, of course, but to go ahead and buy, obviously, the stronger miners. But because we're in a bull market, you have the green light to go ahead and invest. That's probably the number one thing to be aware of right now. We're not even halfway through this by historical standards, so we've got years to go. The miners really only broke out this year. Many have doubled and tripled year to date, but we have years to go. So my theme recently, Dunnigan, has been, look, the easy money has been made, but the big money still lies ahead.
You know, Rick Rule, whom we both clearly have a close relationship with, is always talking about how delighted he is to be in a place where he sees value and yet the crowd has not yet recognized that value. He says he feels just like a Cheshire cat grin on his face when he's there.
Right.
He knows that if he sees the price go down anymore, he's just going to buy more because he's certain that he's found a place of unrecognized latent value. In a sense, it's kind of like being a gold prospector. You're out there trying to find something that's valuable and hidden, because if it were obvious to everyone, it would be gone, and it's not. It's still available there. Are there any key catalysts that you're looking for? What I heard you say was some important indicators. And when you mentioned GDX and GDXJ, just for everyone's benefit and for mine, what we're talking about is not just the metals themselves have been moving up in nominal terms, but then you see the broader major mining stocks and equities rising, and then you see the juniors starting to take off as well. And that's the final evidence that the fuse has been lit for a major takeoff. Am I right on that part so far?
Yeah, exactly. And that's precisely what you want to see in a bull market. You know, gold rose, in my opinion, it started leap year day last year because the Fed came out the day before and said, hey, we're going to raise rates more often and sooner than we thought. That's obviously since changed, but gold took off the next day. It ignited, and it's really never looked back. The biggest correction gold's had since then is 6%. So, you know, we're clearly in a bull market, but when you see GDX, the miners index outperform gold, especially this year, that's key. The miners really only started outperforming this year. And then you see the junior miners index outperforming the seniors. Well, you have confirmation of the bull market. So we have a green light.
It's interesting that you mentioned the Federal Reserve's description of the conditions of their actions, their plans for changing interest rates as being one of the things that can be a catalyst to shifting perceptions on the part of the broader market participants on where the best opportunities are going to be lying in the near term. But debt levels and central bank actions are still front and center. How, in your view, do these forces affect the markets that we're just talking about, which is precious metals and precious metals equities?
You know, Dunnigan, we've had musical chairs here in terms of what the catalyst is that's pushing gold higher. You know, first it was geopolitical concerns, war, and then it was inflation. Then it was the Fed, you know, threatening to raise rates. Then it was Trump getting elected. Then it's the tariffs. What's it going to be next? I mean, there's a whole laundry list of potential catalysts. The way I view it, Dunnigan, is there are many risks and vulnerabilities in the system right now that force me to remain long gold. And if you don't own gold, you need to buy some, in my opinion. But because of all of these musical chairs we haven't sat in all the musical chairs yet. So there's a lot ahead that is very bullish for gold, whether it's a recession, the financial blow up, money printing, stock market crash, gold rises generally in all of those environments. And all of those are still possibilities, plus a black swan. So, yeah, you need to be long gold.
I wanted to stay on that point just for a moment when you said people who aren't need to be long gold. What is your opinion of the shepherds of other people's money? So I'm talking about personal financial advisors. I'm talking about fund managers. I'm talking about endowment managers for major institutions like universities or hospitals or homeowners associations. I'm talking about insurance company executives who are in charge of shepherding the nest egg, basically, of the assets of an insurance company. I'm not convinced that any of those categories have bought into the new reality yet. In fact, they seem to be almost like it's kryptonite, and they can't touch it because it's like the third rail. What is your view of that situation, and B, the implications of that situation, if what I just said is true, on ordinary Main Street mom and pops and their financial future and well-being going forward in the current reality and the current environment?
Yeah, this is a great topic, but the short answer is the more that clients push their brokers and financial planners and institutions and family high net worth offices and blah, et cetera, the more they push on those, the more that audience, that group of analysts and investors and fund managers are going to be forced to put some of their clients either into gold and or gold stocks. And that's going to happen when, gold's kind of made some headlines. But when it really ramps up and goes into, if we go into a mania especially, but when the gold stocks start screaming, and especially the silver stocks, they haven't really moved all that much yet. It's going to grab more and more attention. Investors are going to want more and more exposure, and they're going to push more and more on their financial planner to give it to them. Now, some financial planners are going to always resist. I met with a financial planner. I was going to ghostwrite his book years ago. And boy, he was very anti-gold. So, actually, Dunnigan, when I see that guy buy gold, we might be near the top. So, but I think that's
my fear is that when there's that much reluctance, that it will take so much of what you described as a mania. It will take so much momentum and the final capitulation of fear of missing out to drag in some of those resistant participants. And unfortunately, that may happen at the point then of greatest risk to those who have already ridden out 90% of the bull market.
Yeah, just like in the .com bubble, right? People buying at the very top in early 2000, we'll probably see something similar in gold. I can't tell you for sure that's the way it's going to play out, but we're on the runway right now. We're already there, so maybe it does play out that way. But yeah, some people are probably going to get hurt because they're going to buy near the top. It's just human nature. We'll try to help people the best we can to avoid that. So buy now, but it's hard to avoid human nature sometimes.
If we could zoom in for a moment on how you go about picking a stock or in this case, it could be a mining company, it could be a royalty or streaming company, you'll tell us, but are there 2 or 3 key metrics that consistently stand out to you as things that you're looking for before recommending a company?
Well, I wrote a book to answer that question, but you could easily just start with the 3 legs of the stool, and they all begin with a P: the people, the property, and the politics. So you want the strongest people, and not just people with a really good resume. Don't look at their resume. Find out where they worked before. Go back and look at that company and its share price and see if they created shareholder value. In other words, the stock rise under their tenure. And you're going to find people that have done that multiple times, even in bear markets. Those are the people you want. And the people that have not done that, or their last job was working in marijuana or whatever, I'm probably less interested in that. Politics is very simple. You want a pro-mining jurisdiction. Some jurisdictions, they go back and forth, right? This is especially common in South America these days. They're pro-mining, then they're anti-mining, and of course the regulators have to abide by what their president says. So I'm a little careful there. So why not just go to a pro-mining jurisdiction with a strong rule of law, a strong history of property rights, and supporting mining? You're much further ahead. You've just reduced the risk. Think about it. We're in the most risky industry out there is. And so why add to the risk? Just go to a pro-mining jurisdiction. And then the project, you want to look for projects that are like my grandma's chocolate chip cookies, big and rich, right? You want something that's big enough to matter, because if it's a junior, the exit is 99% going to be a buyout from a senior who needs ounces. They're not going to buy something with 500,000 ounces. They may not even buy something with 1 million ounces. They want something big that's going to last a long time and has strong economics to it. So if you look at those three things, you're really ahead of the game.
When you talk about investors getting drawn to, some of them, to junior miners for the upside, maybe perhaps especially late in the market cycle, juniors or explorers can come with increased risk relative to major miners or operating companies. What's your philosophy on balancing that risk and reward for investors in this space?
That's a good point. You don't want to put all your money into one stock or two stocks. You need to diversify some. The seniors are less risky, but they're not risk-free. That you need to be aware of that. So some of the large producers have done well. Some have not in terms of their stock performance. So you can't just automatically assume, well, the producer is going to be safer. Yeah, it usually will be, but not always. And so for juniors, you want to have a basket. I recommend 10, but don't go out and just buy 10, because sometimes stocks aren't necessarily a good buy today, right? And there's always new picks coming along. So you want to spread it around a little bit. But on the other hand, you don't want to have 50 of these things, because A, it's hard to track, and B, you dilute your return. So even if you get a 10-bagger, your overall portfolio return is really diluted. So I would look around that area there, 8, 10, 12.
And for someone who's just building exposure to this sector, how would you think about splitting investment between physical precious metals, producers, and explorers?
Well, those are two different things. Gold, physical metal, as you know, Dunnigan, is money. And therefore, it also acts as a hedge in our modern society against whatever crisis is coming up. Just look at its performance the last year and a half. All the things that have happened, and look how gold has done. So it's a strong hedge. It's a form of money. There's even been talk recently, Dunnigan, about maybe gold backing part of the financial system again. That would be incredible. It would really rein these politicians in. My opinion, the system's going to have to blow up and force them to do that. They're not just going to voluntarily give up all their spending. So, but that's gold. And then if whatever mining stock, whether it's a royalty, a junior, a producer, a developer, whatever, you have to look at those as speculations. It's almost the stock market, all the stock markets have become almost like a casino, Dunnigan, especially, the S&P and the Dow and the NASDAQ and all that, they're really more of a casino these days. It's a little crazy how things are, taking place. That's a whole nother topic. But my point is, with miners too, they are speculations. You want to look at them as that. And I think that's a more healthy way to look at it, and that'll help you as you screen for the stocks that you may want to own. So, again, you want to have a basket, spread it around a little bit, and I think over time you'll do well.
As long as you're talking about opportunities versus red flags, are there any current exploration trends or regions that you find particularly exciting right now?
Well, in terms of regions, again, I would go with the pro-mining jurisdiction. Nevada, Quebec, Saskatchewan was rated really high in the Fraser survey. There's a brand new Fraser survey that just came out, and that is, if you're not aware of it, but that's your starting point if you want to consider the political jurisdiction of a particular company. They rate and rank based on a number of factors, all these different jurisdictions. And what I like about it is the entire mining survey is completed by miners working in those very areas. So it's also done confidentially. So they're free to say whatever they want. And based on those responses, the Fraser Institute comes along and rates and ranks all of them. So it's very helpful. It can be very helpful. Now, it's a trailing thing. Sometimes politics change, but generally it's going to give you some great feedback from miners themselves in those jurisdictions and help you identify the stronger ones.
Without naming names, if you prefer, what is a common red flag that you often see in certain natural resource companies that make you instantly cautious?
Oh, that's a great question. The answer for me is very simple. It's the CEO who has not invested his own money in his own company. That's it. If there's a CEO out there, and by the way, there's a good example of that. I was at a conference, I'll leave unnamed, met a company, talked to the CEO and thought, oh, I wasn't real familiar with it, so I spent some time with him. It was kind of intriguing. And so at the end of it, I asked, well, how much of your own money have you put into this? A standard question for me. He said, well, nothing. I'm like, nothing? And he says, yeah, I got a kid in school and blah, blah, blah. And he came up with all these reasons why he could not put any money in his own company. But he was asking me to put my money into that company. I'm like, I'm sorry, that's just a non-starter for me. And I told him that. I said, I can't do that, And as a good example, that company failed. It did not make it. And I think it's because that CEO had nothing at risk. It didn't matter to him if it failed or not. He'd just go get another job. So I don't want a CEO that's looking for a job. And if they have not invested their own money, now even if they have 1 million shares, but they didn't buy them themselves, that doesn't count. It's not what they've been given. It's what they've invested, their own money. I want them at risk. I want them pushed up against the wall a little bit, because that's when you really make sure things are going to work. You're going to do your darndest to make this at work because you have to. You got your own money at risk. That's what I look for, and that's what I want.
Along the way of talking about investor education and mistakes, what are some of the biggest mistakes you see beginning investors, either in the precious metals or in precious metal stocks, make on a recurring basis?
Putting all your money into one or two stocks and not monitoring your stocks, not having a little diversification. Every once in a while, I'll run into somebody who owns 50 stocks. That I just don't recommend that. I don't think it's a good way to manage your portfolio and maximize your gains. And then not tracking your stocks. You do need to track them. And if you don't want to do it, that's fine. You need to hire somebody to do it then. We do that. That's what I do for a living. I love it. I'm not pushing my service. Just find somebody you like and make sure that you follow the stocks that you're invested in. And then last, make sure you know why you invested in a particular stock. This is important, especially for juniors. If they got a drill program coming up, what happened in that drill program, you need to know what your exit is. So understand the reason why you invested and make sure you track that reason.
When gold or silver prices rise, and they certainly have been over the past couple of years, not all companies respond to that equally. What are key factors that investors should be watching for when the metals market moves, when they're looking over in the mining sector?
That's a great question because then again, right now we have bifurcation in the market. In other words, we have some stocks doing very well and other stocks just, they're dead in the water or maybe even down on the year. So why is that? Well, there's two groups of companies that are getting rewarded right now by investors. One is discovery, as always. You make a discovery, you're going to get rewarded even in a bear market. The other one right now is that companies that are beginning production, gearing up for production, building a mine, adding a new mine to production, anything around production, beginning production, new production, that is getting rewarded tremendously in the market right now. Two companies in our portfolio that they haven't doubled, they're up like 400 and 500%. And that's because the market is rewarding them. And by the way, those companies are in Mexico. So all the scares with Mexico, and yet these stocks have done really well. I think it's because investors like that. They've started production, they're ramping up production. Investors like that right now. So those are the two categories you might want to focus on right now. At some point, we might have an all boats rise type of environment. We don't have that right now.
This is a personal question. Looking back over your career, was there a moment that fundamentally changed the way you evaluate the metals or mining sector?
Another great question, Dunnigan, and I have a very definite answer to that, and that is this. You remember the great financial crisis back in 2008? Gold crash, mining stocks crash, everything just got obliterated, especially the juniors. Well, we put out, I was with Doug Casey's firm at the time, we put out an alert saying, hey, and this was like early November, right at the bottom of the market. And we put out a note and said, hey, if you've, got the gumption and you have some cash and you want to speculate a little bit, you could buy right now because these things were they were selling for pennies. And we said you could buy them right now. Well, 3 to 6 months later, we started getting thank you letters from people saying, thank you so much for recommending that. I bought some and I'm up 500% or something like that. Just the bounce alone was worth that. But Jeff was too afraid to buy then. It was a scary time, if you remember, in 2008. And I just didn't feel comfortable wading into junior mining stocks at the time. And yet, look what happened. So I learned my lesson from that. And I vowed that I would not miss another opportunity if it came along like that. Fast forward to COVID. Remember, we had the COVID crash in March of 2020. Everything got obliterated. The gold-silver ratio went to a never-before-seen high, over 120. And I said this publicly. I put it out on Twitter and everything. I said, this is crazy. I'm jumping in. And I think I bought silver around, I think the spot at the time was 1305. But what I really did, Dunnigan, was I loaded up on mining stocks. I mean, I just loaded up. It was almost borderline irresponsible. But by September of that year, of 2020, 6 months later, my entire mining portfolio, not just a couple stocks, the entire portfolio was up 400%. By the end of the year, it was still up 300%. So you could say I like big dips, and I cannot lie. It really worked behind that huge crash. And then, of course, we went into a bear market. But, until 6 months ago, we were almost at the same situation where the mining stocks just weren't moving and they were deeply undervalued. And we were buying aggressively, and I still am, as new opportunities come along. But that's a good lesson. I learned to do that because mining's not going to go away. Well, even junior mining, it's not going to go away. So that lesson paid off for me.
You may have already answered my next question, but that was, if you were starting all over as a metals investor today with everything you know now, what would you do differently?
Well, the only thing I would have done differently is take advantage of that big crash in 2008. But I have learned a lot, and I put a lot of that into the book. Making sure you're only with the strongest people. I'll admit we had to sell two stocks in our paid letter last month because they just were failing, and in both cases it was because of a failure of management. So you have to link up with, invest in only the very strongest people that have done before successfully what you're considering investing in now. So I would focus even more on people. We always talk about it, right? People are number one. It's really true. You got to invest in the strongest. I would look really close at that. I admit in the book a story about how I lost because I invested in a bad political jurisdiction. So I learned my lesson there and pay attention to that. So, those are the things diversify maybe a little more in the beginning. But I'm pretty happy with where my portfolio is now, and I'm pretty excited about what the future might hold.
For a listener who wants to get smarter about investing in this space, what's one action they should take after watching this episode?
Well, I'm tempted to say read the book, but I'm not trying to sell it.
What's the name of the book? Do you have a copy you can show us?
Yeah, it's called Pay Dirt. It's right here. So it's Mike Maloney's video guy said, Jeff, I got the perfect title for you for a book. He was after me to write a book, and I'm just like, I don't have time. This is pre-COVID. And finally, COVID hit, and I'm like, okay, I have the time. So, but he came up with the name Pay Dirt. And so I sat down, and it took about 2.5 years, then again, off and on. We had a draft. It had to be rewritten. We interviewed other people in the industry and decided to put them in the book. So a lot of other books don't put other people in it, right? But we did. We have 17 other people in the book, all the way from the Rick Rules of the world down to geologists you've never heard of, all giving their input on certain factors of picking mining stocks. That's what it's all about. But there's a couple good chapters in there on gold and a really good chapter on silver that's kind of fun to read. And you can read a free sample chapter on the website, the scariest mine I've ever been in. But be warned if you're claustrophobic before you read it. So, again, I'm not trying to push it, but I did write it because I was getting that very question all the time. Jeff, why did you pick this stock? Why did you pick that one? Why didn't you pick this one? So that's what kind of started the idea of writing a book. So, but the main thing is, however you do it, you want to get educated in the sector, because this is not like buying Apple or Amazon. This is very different factors, different things that impact stock prices. So you kind of want to get educated, familiar with the industry, dip your toe in, slowly if you want, or hire a newsletter writer, follow somebody in the industry with the understanding that no one person is going to be right all the time. But the idea is that, we're going to see 10-baggers in this industry a lot. Dunnigan, did you know that from 2009 to 2011, just that 3-year time period, there were 141 10-baggers in the junior industry? 141. So you're not going to get all those, of course, but what if you got only 10% of them? What if you got only 5% of them? How would you feel 3 years from now you had 5 10-baggers or more in your portfolio? Well, we'd all be pretty happy with that. So it's going to happen again. It's starting right now. So whatever you do, if you're new, try to get yourself educated and familiar with this industry before you put your money at stake.
Okay, this is now going to be a very, very, very quick thing. We call it the lightning round. So we're going to, in honor of your gold advisor, we're going to call this the Gold Advisor Lightning Round segment. 4 questions, each one, you get about 10 seconds on each one. First question, they're all unfair, so that's my fault. Gold or silver? Gold or silver, if you could only hold one for the next decade?
For the next decade. Oh, okay. I was going to say silver because I think, as most of your audience knows, it outperforms gold in a bull market, but gold leads, silver lags in the beginning. That's where we're at now. So gold in the short term, silver in the long term, if I can say that.
You're bending the rules. Number 2, physical bullion or streaming companies?
If those are my only 2 choices, I have to go with physical gold. Those, again, are 2 different investments. Gold is money. The royalties, even though they're lower risk, are still a speculation.
Fair enough. Number 3, favorite mining region: Nevada, Quebec, or Latin America, or fill in the blank?
Well, if I have to pick only one, I guess I would say Nevada, but Quebec would be a very close second.
Last one. What is one metal, trend, or company you're most excited about?
Well, I need more than 10 seconds, but we just have a brand new pick we put on our paid newsletter. I'll give you the name, but don't get mad at me if it doesn't work out. You have to subscribe to see how it does and what we follow, but it's called Golden Cross Resources. It's actually in Australia, pro-mining province there, but they're right next door to Southern Cross, which made a discovery and now is over $1 billion company. And this tiny little Golden Cross company is drilling the same geological structure that Southern Cross has. So it's potentially very exciting.
Last one is the easiest one. Where can people follow your work and dig deeper into your analysis?
Everything's under the umbrella thegoldadvisor.com. So we cover all the main metals, gold, silver, uranium, copper, even some lithium. We've got a full staff. Peter Kraut came over. We talk about M&A in the gold sector. Well, we had some M&A in the newsletter writing sector. I acquired Gwen Preston's business last year, so Peter Kraut came over. He focuses on silver. He's hired another analyst. I've hired another analyst, so we're growing gangbusters. So we're here to meet the needs of people that need it. Free newsletters, paid newsletters, a premium service even. Peter and I both have books. They're also on the website there you can look at. But everything starts there at that umbrella, thegoldadvisor.com. And I just have to say, Dunnigan, I'm excited about the future. I am personally investing very heavily right now, and you can look over my shoulder and see everything that I'm investing in, both on the free site and the earlier stage opportunities in the paid letter.
Well, Jeff, it's been, as I mentioned in the beginning, far too long since we've had you. Just delighted to be with you again and to have you on our channel. Hope we make this a habit. And folks, go check out thegoldadvisor.com. And if you don't want to miss a single episode with Jeff or any of our other guests, make sure you're on our newsletter. Just go to libertyandfinance.com. Liberty and Finance, all spelled out, all one word. Put in your email address, click submit, make sure you confirm. The confirming email, you'll get 1 email in your inbox per day. And we won't share your email address with anyone. You won't miss a single episode with Jeff or any of our other guests. Jeff Clark, founder and editor of The Gold Advisor at thegoldadvisor.com. Thank you for joining us again after this long hiatus here on Liberty and Finance.
Yeah, this has been great, Dunnigan. Let's do it again soon.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for August 4th through August 11th, 2025, while supplies last. First this week, backdated 1-ounce Canadian silver maples are just $2.89 over spot, the lowest premium we've seen on maples in years. Next, backdated 1/10-ounce Platinum Britannia are only $34 over melt per coin. Backdated gold 1-ounce Britannia are just $59 over spot per ounce. And finally, 100-ounce PAMP Silver Bars are only $1.89 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.